Hello, hello, hello. Welcome to the weekend video. This is a bit of a strange start to a video, but hey, I'm feeling a bit strange this evening. Maybe it's all that message board action. All right. Inside joke there. Sorry. Here is the weekend video. Obviously, you're watching it, and it's the weekend. And I'm just going to go over the charts and let you know where my mind is sitting this evening. A little bit. You'll see when I go through it. You'll see. A little bit hopeful, a little bit confused, but I always find this a little bit. I find this action of doing a video to be almost therapeutic in a way. It's almost like a fleshing out of the thoughts in the head. It's like, you speak things into existence. That's the biblical idea of the word creating. You speak things into existence, and then they kind of form in front of you more solidly in your mind. I'm sure Jesus will tell me more about that when I meet him. But it's a pretty. I think it's a pretty solid psychological theory as well. Anyway, here we go. I'm only 30 seconds in and I'm already running off on tangents. Okay, if I start tangentialing again, snap your fingers. Okay, here we go. Here is euro-dollar. The long time wave count of trying to catch a top in a very large B wave. Maybe we're there. There's a good chance that we are probably going to challenge, you can see here on the 4-hour chart, we're probably going to challenge that 200 MA again. Or is that's the 200 MA, is it? Yeah. It looks like some sort of a corrective, a larger 3-wave pattern is forming here. Maybe we'll just sneak in under that 200 MA and fall again, hopefully into a third wave. Okay, this is a large wave 5 of C of B. So if you go out to the daily count here, you can see A, B, C. So it'll be some sort of a running flat, or a failed C wave. We will have to just play on that and see how it goes. For the moment, I'm comfortable to see a top here. I'm pretty, let's say, encouraged by the action in dollar yen this week. So we'll get to that in a short while. Here we have the hourly count of euro-dollar again. I know people were complaining that they couldn't see what chart I was working on, so I will make an effort to kind of clarify what I'm looking at. Okay, so here's the hourly euro-dollar. Here's that larger wave 2 possibility here. So we've got 3 waves up anyway. The reason I'm working with the idea that wave 2 is already complete is, well, we have 3 waves up. So, that's reasonable to contend that we have a correction complete. We fell off that high, and so far we either have a series of 1-2s, like 1, 2, 1, 2, excuse me, or we have 3 waves down, and we are complete. The pattern in the last day or two does not fit with a C wave, and that's kind of where I'm willing to stick with the main count here rather than flipping to that alternate for the moment. But either way, we'll probably challenge, let's say, that previous high. So somewhere up around 122. So we have this previous high is at 121.89, and we have 50% retracement at 122. So that's a pretty tight band of resistance there. We have a previous A wave high here of 122.22. So 3 levels that we should watch if this alternate count comes to fruition. I'd like to see this correction complete next week, or early next week, or today, and head lower again. There's still a pretty good chance that we are going to move into a third wave. So if we sell off pretty quickly, either later tonight or I would say, what's this internal low here? 120.80. We break 120.80 again. I think that'll probably be the nail in the coffin here, and we'll probably accelerate down into a third early next week. Okay, let's move on. Here is pound dollar. Again, a C wave high. The pattern has been basically tracking the death of a momentum rally, and that's all that's been happening over the last 2 months now. What price are we today? 137. We pretty much just got grinded sideways to nowhere since early December. The 4th of December high here. I'm working with an ending diagonal. If we get into the hourly chart, I'll show you how that's kind of playing out. We have here this initial pattern here. I had thought that wave 4 was down here. We just had this 3-wave drop. I was counting wave 4 here, and then we had a 3-wave rally, which was wave 1, 2, 3, 4, and then I was counting a 5th wave here. I think I've changed that this week to a 4th wave triangle. So we have wave A, B, C, D, E. It fits quite well. It does oscillate around kind of a central tendency there of about 133.40. And off that we had again an anti-diagonal pattern. So we had an ABC up in wave 1, ABC down in wave 2, or an A running flat BC, most likely. And then we had a 3-wave move up in wave 3, 3 waves down in wave 4, and so far 3 almost complete, maybe nearly. The lower trend line is still rising, but the pattern is very, how do I say, terminal looking. We shouldn't get much higher. I'd say above that. The interim high this week was 137.57, so I don't think we get much higher than that, even if we touch this upper trend line here, 137.70, 137.80. Maybe we'll fail even before that. Who knows? But right now we have this really tightening wedge, a series of 3-wave kind of lurches higher. So we are still within the realm of an ending diagonal, and I think we'll probably see a pretty rapid retracement once we do turn. And as so often happens, we have turned in dollar yen, it seems, or we're at least the market is trying to turn, before someone tries to come in and crush it again. We'll see how that goes. The dollar yen made efforts earlier in November with a rapid spike higher, which I thought may have been the beginning of, let's say, a trend change in dollar yen. And again, over the last couple of weeks, we've had, so far a 3-wave move higher, but the internal pattern is looking quite promising. And I'll get into that in the hourly chart now. But let's say, as it stands, the balance probabilities is pointing towards a low being in for dollar yen at that 102.50 something, 102.60 level. Let's go to the hourly chart here. This is dollar yen hourly chart again. So we have, what was that low? 102.59. That's the B wave low. So again, what I'm tracking is, in general, here's the daily chart, a B wave low of a triangle and a very large C wave rally to come, hopefully, maybe. We'll see how it goes. The pattern right now, we accelerated nicely this week. So we had a 5-wave rally and we had a 3-wave decline. So that was wave 1 and 2. This rally over the last 2 days, it could all be wave 3, which is interesting. and I'm not discounting that at all. This could all be wave 3 of 1 of 3, or we might be looking at the initial move off the low being wave 1 and 2, and this all being wave 3 here in blue at 1 degree higher. So it's kind of yet to be decided. The thing, I suppose, that is keeping me from, well, let's say the main, I'm sticking with the main count for the moment, basically because it's followed the tack quite well. There's no real point in changing right now. I think the decider will probably come if, depending on the size of the sell-off that we're going to get eventually. If we continue higher on Monday, maybe into Tuesday, I think we'll probably, let's say we break out above that 105.60 level. That kind of marks a previous. That's that spike high I was showing you on the daily or the 4-hour chart back in November. If we break that without any significant internal correction here, then we'll probably swap to either wave 3 of 3. So this will be wave 3 of 3 alternate. Yeah, somewhat like that. If we don't get any sort of a significant decline early next week, then we swap to that idea of a 3 of a 3, a third of a third rally, especially if we break 105.67, which would be that previous, the bounds of or the upper bounds of that the pattern back in November. Okay, well, so far so good. We'll just see how, we'll just track how the corrections go. Right now, we have a critical stop basically at 103.30. You could probably even push that a bit higher. Maybe this internal B wave here, 104, or leave it 104 flat. I would like to see, if we are going to see a second wave, I would like to see it kind of hold above this, the top of the shoulder here. Kind of that internal B wave here, 104 level, looks kind of inviting as a support at the moment. Obviously, we've got the wave 1 high there at 104.39. So it's a progressing pattern, and it's promising, and it should have implications on the flip side with cable and Eurodollar. So that's how we're going on this one. It doesn't augur well for risk assets if we are seeing a major trend change in the dollar right now. So keep that in mind as well. Here we have the Dow top formation, possibly. So far so good. We haven't had any, real, let's say, shocks to the downside just yet. There hasn't been any, for want of a better word, pukes. We could still have this ending diagonal pattern underway. It just kind of, it doesn't seem to want to show its hand just yet. But for the moment, I'm liking what we're experiencing. I'm liking what we're seeing. We definitely have kind of hit a ceiling on the momentum so far. Well, let's say, in fairness, this market has been pretty, let's say, constrained. At least, if you're going to talk about how range bound it is, at least probably since the end of December, which you could probably go back here to the end of this third wave here, back in early November. So we've been pretty kind of muted. Although we did see a rally, we've been pretty muted in terms of the fact that we've retraced half that rally anyway at this point. So maybe we've got a head and shoulders developing. We're surely in the right place for it. So let's see how it develops. Here is that, we've got that third wave high. And we have an A, B, C, real Oh, horrible pattern, but it is what it is. And then we've got that ending diagonal possibility still kind of tracking out. We've got 3 waves up. You could take that to this high here or to the extreme high of wave 1, dropping wave 2. We've got an ABC 3 wave up into wave 3. We've got ABC so far down in wave 4. And here's where the flip comes. Do we trace out 3 waves up to a new high? And today's action is interesting because this could develop into a 5-wave pattern or lower. If we break at this point in this pattern, in this ending diagonal pattern, what would kill it completely is if we break this second wave low here. So that comes in about 29,870 or so. It could be different on the cash chart. I haven't checked that right now because this is, as always, this is an amalgamated kind of futures and cash that I'm tracking here. If that was the case, well then maybe our diagonal pattern looks something more like this. 4th wave low here, and a final 5th wave low here, 3rd wave here. So we might have, I'd be much more happy to throw that wave 1 down here. So we've got a 1, 2, 3, 4, 5 into a final high, and then the kind of a switching of the guard, let's say, back down lower again. I have to say, this week is looking interesting as a turning point. I'm not going to discount it completely. The declines could well be some sort of a 5-wave pattern or lower. Maybe if we kind of neutralize that wave A low here, maybe it's some sort of a wedge pattern lower. Depending on what we see early on Monday. I mean, if we get a buyback in on Monday, that probably I'd probably just discount that idea that's brewing in my head there, and then we would just go with that final C wave top to come later on next week. But again, I think it should be just one final run to complete 3 waves up in a 5th of a 5th of a 5th of a, you get the picture. We have this kind of target band here. You can see this blue target band here. That's wave 1 equals 5. So we have 5 here in blue. So wave 1, if we go out to, I think it's the daily chart. Where would we go? Yeah. So the March low came in, or was it early April, or 22nd of March. The initial move off that March low gives us wave 1 blue. So we have 3 waves down off that. Wave 2, and then an extended rally in wave 3, 3 waves down in wave 4, and now we're on the wave 5. So you could see that wave 1 and wave 5 in blue here reach equality at 3670 or in that area. So it's nice at this point in time that the rally seems to have come to a head in around that typical kind of target area. So kind of fingers crossed. So we'll see how it goes next week. If we are going to get that C wave rally underway, it's got to happen pretty early next week, and we've got to hold that higher low in wave 4 that we formed on Wednesday, I believe, 27th. Yeah, Wednesday low, late Wednesday. So we'll see how that plays out. No, I can't point to it as a top just yet, but I know that we're close. Okay, gold. Let's move on. That's not gold. Probably gold. Where are we? Here. Here's a 4-hour counting gold. We still have 5 waves down. We're probably doing something still on a second wave. We had a decline, but the declines have not materialized into anything impulsive just yet. So I'm looking at a continuation lower in 5 waves in a possible C of 4. So I've kind of switched to this alternate count from this high here but it's kind of a balancing act at the moment. It could be, or I mean, the main wave count that I've shown here could still be in operation. We haven't broken that previous low that comes in at 1763, and until we do break that low, we don't confirm this alternate count. But if this is a wave 1 low here, which was formed on the 15th or 16th, was it 17th? Sorry. If that was a wave 1 low at 1801, or you call it 1800 clear, if we break 1800 again, that would definitely be, in the realm of a third wave decline underway. So what you'll be looking for is 5 waves down in wave C, pointing to a low somewhere below 1700, maybe pushing down towards 1600. We'll see how that goes. So here's the, let's say, somewhat predictable, but still interesting surprise today with a little bit of a spike, very slight new high, and then a reasonable spike lower off that high again. So it raises some, what's raising my eyebrows anyway, but for the moment it could be that we've just got this complex correction in wave 2 done. We do come in at, what are we coming in at? Actually, down here. We come in right between the 38 and the 50 retracement level, close to what the 50% retracement comes in at 1880, and we topped out today at 1875. So, we're within what's a fiver between friends. If we are topped in wave C now, that kind of classifies this as an ending diagonal, I'd say, again, or maybe expanding wedge. Actually, it's an awkward pattern. Whatever way you want to look at it, it's an awkward pattern. But maybe it was pointing that way anyway. We had 3 waves down. We had a possibility of a running flat wave 2, then a spike lower, but that was pretty much ruled out today. Well, it was ruled out today by this spike higher into a very slight new high. So actually on the day we're probably pretty flat, even down maybe on last night. We call it flat on last night. So the market's gone nowhere again. It looks to me like we're tracing out a 3-wave correction, and we should head lower into a 3rd wave. That's the theory that I'm working with. Let's see how it goes from here on out. We should see, if that's the case, we should see a pretty significant follow through on Monday evening into Tuesday to begin an impulsive move down in wave 3. So you'd look for, again, I'd say this B wave low here about 1830 would be a good signal point. If we got a break of that with a reasonably impulsive looking move down, then I think we're game on for a 3rd wave decline. And gold seems to be just kind of drawing towards that larger 4th wave correction. Here's a daily chart in gold. The point right now is, are we on an A, B, C pattern here? A large B. Oops. Here's what I'm thinking on the daily chart. Okay. That we trace down to somewhere around 1650. We'll call that a ballpark decline in wave C. So you could have wave A here, and then a running flat wave B, or wave A all the way down into the, the 1760 low, and 3-wave correction higher in wave B. I favor this wave A here, and then running flat wave B, and then heading lower in 5 waves in wave C. So it is a shaky time for the gold market. I think we'll probably test that lower trend line there on the daily chart, somewhere down around 1600, 1650 maybe. And at that point, if we get there, I think that will mark probably one of the best buying opportunities you're going to see in a long time, especially if we're heading higher in a fifth of a third wave. So we'd probably hang on to your hat for that one. But next week, it looks like we sort this second wave out and we head lower into a third wave. Okay, crude oil, not much to report on crude oil. It seems to be just correcting sideways this week. We might have a possibility of a triangle developing here. Just looking at it this evening, that we do have a kind of tendency to contract over the last week. And we are kind of ruling out whatever happened this week. It hasn't been impulsive anyway, that's for sure. So we could be moving into a triangle. It could be an A, B, C, D, E. Maybe we're finishing quite quickly into a triangle fourth wave. And then we pop higher into wave 5. It just hasn't, the pattern hasn't kind of shown its hand yet. So I'm willing to just kind of wait on that one, just to see how it plays out. So hopefully next week we'll get some clarity on that. Declining again this evening after, it's evening here, so it's probably after morning time over in the States somewhere. It's New York, so what's that? 12. It's 11:30. Well, trading's well underway in New York, and we're trading lower, so still range bound. But we haven't seen anything in the way of confirmation here yet. No confirmation of the top, no confirmation of this corrective fourth wave being over yet either. So I'll just have to let that kind of lay for the moment. The pattern in the S&P is a little more interesting. The move off that definite new high early this week, was that this week or late last week? Forgive me. 26, yeah. On Tuesday, was it? Monday, Tuesday. I'm losing track of myself because we're just kind of housebound, with this darn lockdown. Anyway, it is what it is. Kind of lurching from one lockdown to the next. I don't even like I don't even like the fact that we've gotten used to using the term lockdown. If you can see tiredness in my eyes, that's a reason why. Tiredness in my eyes, joy in my heart. I'm showing you that alternate account there. I make myself laugh. You see, I'm kind of like Tom Hanks on that movie. What is it? Castaway, where he's talking to his football. I should find a football and draw a face on it and pretend that I'm somewhere else on holidays in Seychelles. Okay, move on. I'm rambling again. Okay, here we are. I've the S&P. I'm on the S&P. Start talking about the S&P, and this could be the alternate account here. I've shown a possible wave 1 down. So the move off the Tuesday's high, or was it Monday's high? That was a pretty sharp move. Now we got a solid retracement as well, but you can't decline, or you can't deny the impulsive looking nature of that move off the high. So it could be 5 waves down, and maybe it's 3 wave up into that Wednesday high there. So 38.30 becomes a pretty interesting price at this point. And we've not really done much we haven't answered that yesterday's decline or Thursday's decline at all yet today. So it does beg the question, are we tracing out some sort of an impulsive move lower here? The scenario remains the same. Excuse me. If that is the final high back here on Tuesday or early this week, then we have this ending diagonal pattern moving tighter and tighter, which is it's good. That's a solid pattern basis to work from anyway. And the fact that we've declined impulsively off an all-time high, there's alarm bells there at least. There's a price level there that I shouldn't really have. So we could be in a phase shift here. I mean, at least in the short term. I mean, any sort of bullish pattern that might have been developing, or that you might have been leaning towards as we kind of climbed higher and higher. As you know, maybe people were tracking a series of 1-2s that seems to have been kind of wiped out this week by that pretty impulsive decline. So maybe, just maybe, we've been thrown a bone here, and reality has started to set in for people. I know people don't like reality these days. From my previous kind of moan there about lockdowns, you can say that I don't like reality either. Like, we are in what we are in, no matter what way you want to look at it. But maybe, just maybe, I'm always willing to take the downside punt anyway. I'm always willing to be a contrarian, and a bearish contrarian. But I'm happy with the way the pattern sits right now. I'm even happy if we run to a new high, because it would complete an ending diagonal pattern. I'd still look for the same turn, as you can see on the main wave count here. But you know, there's kind of a little twinkle in my eye this evening or this afternoon that maybe, just maybe, we're looking at something more significant here that's happened this week. I found it just so interesting to kind of track what's happened with GameStop this week, and you know, the kind of, let's say, a battle for justice that, or perceived justice that the stimulus check crowd, that the Robinhood crowd, and I have nothing against Robinhood really, apart from the fact that they're gamifying something that shouldn't be gamifying. But I found it so interesting in terms of like a social psychology perspective, that here we are, you know, you're gathering this kind of coalition of politicians, entrenched market participants, let's say the hedge funds, like the broad spectrum of people that have kind of clued in on this one little glitch that seems to be like a glitch in the matrix. It just feels like such a thing that would happen at a high. It just feels like it's almost like a resonance moment. It's almost like a symphonic type of crescendo moment. I don't know. I'm probably making absolutely no sense to you, but in my head, this feels like the froth on top of the froth, on top of the froth. Like, when you break down the argument that's happening, you have, you know, people that use the app, Robinhood and TD Ameritrade, and you know, all the rest of them, that were blocked out from trading, from buying into a constructed bubble. I mean, the trade in GameStop was not a natural, you know, animal spirits type of thing. I suppose you could blame on animal spirits, but I mean, it was started on a message board. You strategically pick a flatline stock that had a very heavy short interest in order to force the short interested parties, the short parties, to buy back in and cause a horrendous ramp in the price. And it worked. I mean, it was genius, really. It's a genius plan. Kind of crowdsourcing bubbles, like constructed bubbles, crowdsourcing bubbles that will collapse. And people are arguing that obviously it's your right to crowdsource, or is it? I'm not sure. It's your right to pile onto a stock if you want. but arguing for your ability to be involved in a Ponzi scheme seems so kind of surreal. It's just like I really had to pinch and blink at the same time. And then politicians coming in arguing for the people who, stating that people have the right to be involved in, pernicious bubbles, especially ones that are created on message boards. But it just seemed, and I know there's counter argument too. I mean, the apps shutting down trading in these instruments as well. I mean, of course they got a phone call from Citadel, and of course, there was people screaming down the phone, the CEOs of those apps, and obviously they got told to shut it down. But I just found the whole thing so surreal that it just felt like I was looking at one of those, you know what I mean, a real frothy pint. That's what I felt like, and spitting bubbles coming off the top of it. Okay, I'm going to move on. Right, that's the S&P. I'm going to move on. I'm just going to cover silver. Silver got the ramp this week too. Still seems like a three-wave trade higher, and this is a message board move as well. It came quite close to invalidating the previous count that I had. For this evening, anyway, I'm sticking with the idea that we have a B wave top in, and we have 5 waves lower, and an ABC rally. Who knows? I can't call that one right now because, again, it's been traded as part of a message board group. So we'll just have to see how that kind of plays out. It does look like a reasonable 5-wave pattern higher again, even into today's high. So let's say if we push back down below that A wave high again, let's say if we push back below 26 again, maybe then we could probably look towards a 3rd wave beginning. But definitely kind of got sidewinded by this bubblicious move here. Okay, I think I'm done. I'm not going to go into the other markets, although actually I am going to run to Nasdaq. Go on, that's because I was just looking at that a second ago. The decline today, it does look pretty. It looks very interesting. It looks like we may have. I'm going to change that up by 1 degree. And maybe we have a series of impulse waves. And I suppose it would be telling that it's happened in the most sought after, the most chased market on planet Earth in history. So the tech stocks declined impulsively, rallied in 3 waves, declined reasonably impulsively, rallied correctively. Maybe we don't have this second wave complete. Maybe we don't even have this second wave complete. But for the moment, should we see another move lower again next week, this could be a third of a third. So watch out for that one. Okay, that is that. Thank you again for hanging around. Forgive my rants, and although I don't rant I'm not a prolific ranter, but thank you for listening. If you hung on to the end of this video, you're a little saint. God bless you all. Have a great weekend. Thank you to all the subscribers of the website. If you're interested in the website, head over there, bullwaves.org, and check out the membership offers. And for members, I'll see you later on. I'll probably start shortly. I'm going to have my tea sandwich and then come back up. And for those of you who are not, I'll see you next week on the weekend video. Yeah, that's it. God bless. Have a good one. See you Monday or in the next live. Bye-bye.